Sridharan, the MD and CEO of Piramal Finance, is now joining in after the relisting of the company. And Surabhi is here to take the conversation forward as well. Surabhi.
Mr. Sridharan, it's a pleasure to have you with us. And Hormuz, thank you for that handover. Indeed, shares have been trading with gains. Let's just pull up the stock price. Last I checked, it was still up about 5-6%. It was a positive listing. Oh, actually make that 17%. That's a solid move coming in on Piramal Finance after the merger of Piramal Enterprises with the financial entity itself. And those are the visuals from the listing in the morning. So let's try and understand the trajectory ahead for the company, growth segments, and how things will look from here on. Sir, thank you so much for joining in, and congratulations on, the listed life now in this new avatar. So if I go back and look at, some of the numbers, the Q1 numbers that we have, growth has been pretty robust for you. I mean, over 20% growth coming through, and your AUM, your total book, has crossed 85,000 crores. The bulk of that, obviously, is on the retail side. So just walk us through, how you're looking at the different segments behaving and performing, and whether these kind of growth trends, your own guidance, I think, is closer to 30% growth for this year, 25-30% growth this year, whether you think you'll be on track with that.
Hi, Surabhi. Thanks for having me. Yes, we have had a really solid start to the year. The first half has been very kind to us. We have been well above 20% on a consolidated basis, and in our core business, we have been up by almost, about 35%. So it's been a very, very strong start on growth. Yes, we are seeing, growth momentum continuing. Certainly for the rest of the year as well, growth momentum should very much continue. We are seeing strength in the retail segment, in the loan against property market, in the affordable housing market. We are seeing a little bit of strength in digital lending. We are seeing some strength in personal loans. So there is a lot of pockets of strength. There are also some pockets of weakness. But on the whole, we have seen 30+% growth so far, and that is not waning off. October was pretty decent as well. We disclosed, I think yesterday or day before, that for the festive season this year compared to the last year, same festive season, 1 month around Diwali Dussehra, our growth was 45%. So the festive season has been very solid. As well, GST cuts have helped. So lots of things are coming together. Growth is looking very solid right now.
Yeah, and that's been the case with Piramal Finance for a while now, right? Because I think over the last 4 years, from a retail book, which was just around 5,000 crores, now you're talking, northwards of 70,000 crores. So, what's interesting is, and I'm just going back to commentary from one of your peer entities coming through, and I'm talking about Bajaj Housing Finance. It's just top of mind because we just read the commentary out in the morning. Interestingly, now they're saying that there is a fair amount of competitive intensity in the market. I mean, the fight to go out there and win customers. Specifically on the housing side of your book, because that's a large portion of your business, are you also seeing this?
Yes.
And that's one entity. I mean, Bajaj Housing is actually calling out for some pressure on margins because of competition. What would you say to that?
Yeah. See, this is indeed happening in the prime segment. In the prime segment, where customers are borrowing at, let's say, 10% or less, there is a lot of competitive intensity, and growth rates are really suffering for everybody, and margins are suffering for everybody. We are not in that segment. Our average rate at which we lend housing loans is anywhere between 11.7 to 11.9%. So we are a good 200 basis points above kind of a lot of the banks and AAA NBFC players. So we serve a very different market. Our ticket sizes are also very small, are compared to like 40, 50 lakhs or above kind of ticket sizes for some of these other players. Our ticket size is 22 lakhs. So we are much smaller players. So we serve small town India, small customers there, but we charge a reasonably stronger yield for it. And in that segment, in that middle India, basically, semi-urban India, we are actually not seeing this competitive intensity problem. We are seeing strong growth trends. Our margins are not coming down. In the first quarter of this financial year, the average yield of our housing business was 11.7%. In the second quarter, it was 11.9%. So yield actually went up. Q1 to Q2. So no, we're not actually seeing pressures, but we are working in a very different segment and very different geography, to be honest, compared to some of the peers that you mentioned. The AAA world operates in a very different universe, and in our universe, in the middle India that we serve, semi-urban India, we are not seeing the same competitive pressure.
Okay, all right. That's a good perspective to have. Speaking of yields, let's talk about the overall trajectory. As of Q1, your margins, net interest margins, were just shy of 6%, right? Just about, I think, 5.9%. And there was actually, the growth quarter on quarter on margins as well. So just give us the strategy from here on. A large part of your book is retail. Within that, how much is unsecured now? Will you push more on unsecured in search for yield? And what can investors expect on margins as we roll through the rest of the year and beyond?
Yeah, you should expect to see margins improve with every passing quarter at Piramal Finance. In fact, if you see the last 8 quarters, practically every quarter our consolidated margins have gone up. And we started at about 4.25%, and we are now close to 6%, as you rightly mentioned. So we have been raising margin with every passing quarter. You got to remember that Piramal.
Okay, I think
a bit faster in this in such a company, and so metrics will continue to improve. So you should expect to see us above 7% over time, as from a consolidated margin perspective. On the
that's
on the
interesting.
Whole,
That's a
makes a return on.
Mr. Sridharan, that's an interesting headline. So 7%
Yes.
margin. By when and what will drive it?
Yeah, absolutely. You should totally expect that. You should totally expect that over the next kind of year and a half, we should get there. And the consolidated margins will keep going up, both for cyclical reasons and for structural reasons. Cyclical reasons you're aware of, what's happening to the rate environment. RBI has cut rates. Banks have not yet cut MCLRs. But as and when they do, we as NBFCs who borrow from banks in big way, that will get accrued to us, at least in part. So that's the cyclical story. But there is also a structural story of us divesting away a lot of our negative margin businesses, and that keeps increasing our yields. Plus, structurally on the book, you spoke about unsecured. Today, 17% of our total portfolio is unsecured, and I've stated in the past that we would like for that to be close to 25% over time. So you will see us invest more in the unsecured lending business, and that's another structural reason why you should expect to see higher margins. So yes, absolutely, you should expect to see margins going up. On the whole, from a profitability perspective, Surabhi, with today or the second quarter, we published return on AUM of 1.7%, and we have guided the market that we want to be close to 3% over time. So you should expect to see our return on AUM steadily increase from where we are currently, where as a young company we've just about gotten to kind of 1 3/4 as our return, but we aspire to be 2.5% to 3%.
Okay, so 30% growth on the book, a 7% margin over the next year and a half, and maybe a 2.3% kind of return on assets under management. Got that out of the way. Now, since you spoke about building up the unsecured book to 25% of the total book, that brings me to the question on asset quality and the confidence that you have there. Of course, trends are looking very healthy now. Your credit cost declined in the first quarter. But what are you seeing on ground in terms of asset quality? And is there some element of risk there as you keep building on the unsecured portfolio?
I think unsecured, of course, went through a very painful period last year. All the way from April to November, December last year, it almost felt like every quarter risk was getting worse compared to the previous quarter. But things have stabilized since then. This calendar year has actually been better. Things have remained fairly stable. Things have not gotten a whole lot better. It has just been stable. It is not deteriorating. But in general, Surabhi, unsecured lending is always going to be a little bit of an up and down business, a little bit of fasting and feasting type of business. And last year was a tough year. for the sector overall, particularly for some pockets of unsecured like microfinance, as we all know. It was a particularly bad time. But in general, it was a tougher time for unsecured lending last calendar year. But this calendar year has turned out to be less challenging, and things have been a lot more stable and predictable. So the way I might say this is that last year that engine was in brakes mode. This year that engine is in neutral gear.
Sure.
Not yet in acceleration mode, but at least we have gone from brakes to neutral gear.
Okay, and a very final question. We only have 30 seconds left on the chat, but it's a good question to ask you, someone who's a veteran of the industry, and you've been on the banking side and now with the NBFC side. I mean, are you expecting more policy easing? And if yes, and in this environment where there's both fiscal and monetary easing, which ones will be better off in the growth race? Large banks or specialized NBFCs?
The last couple of years have belonged to NBFCs, honestly, but banks will come back, and I have a lot of respect for what banks are capable of doing, and particularly the private sector banks who have lagged a little bit in the last couple of years. I'm sure they'll come back, but right now, tailwinds are very much with NBFCs.
Okay. All right. We wish you all the best for your operations and for the rest of the year, and look forward to more conversations now in this new avatar at Piramal Finance. Thank you for joining in. Thank you. So, Harmaz, there you go. It's a new avatar, one more NBFC, and an NBFC that's sounding extremely bullish and fairly confident of growth.
And an NBFC that's bucking the trend in an otherwise weak market as well. 17.5% higher for Piramal Finance. So, a strong listing on the bourses. Take a leave on this edition of Trading Hour. Thank you so much for watching. Halftime report on the other side.